In what could be a worrying sign, global ratings agencies and research companies have further slashed their India GDP growth estimates for FY21. While Fitch Ratings now expects the country's GDP to contract 10.5% in FY21 versus its earlier estimate of 5% contraction, India Ratings said it expects an 11.8% contraction against the shrinkage of 5.3% forecast earlier. Goldman Sachs, on the other hand, forecasts a sharper contraction at 14.8% in FY21, which has been revised downwards from 11.8% of contraction forecasted earlier. This is so far the deepest cut estimated for India's FY21 GDP. The revision by brokerage houses comes at the back of a sharp contraction in Indian economy in the April to June 2020 period, when the GDP came in at negative 23.9% on a year-on-year basis, the worst performance in nearly 4 decades. India's Q1 GDP fall was one of the sharpest seen in the world. Fitch Ratings said that India had imposed one of the most stringent lockdowns worldwide in the April to June period, and the domestic demand fell massively. Limited fiscal support, fragilities in the financial system, and a continued rise in the virus cases have hampered rapidly normalization in the activities. It also said multiple challenges were holding back the economy, warning of a looming deterioration in the asset quality in the financial sector. Fitch's estimate for India was in contrast with its marginally improved projection for the global economy in 2020. Fitch, however, expects growth to rebound sharply and strongly in July to September period amid a reopening of the economy. However, it does caution that the recovery has been sluggish and uneven as the level of activity is still well below its pre-pandemic level. Still depressed levels of imports, two-wheeler sales, and capital goods production indicate a muted recovery in the domestic spending. Both Fitch and Goldman Sachs, however, have forecast a sharp bounce back for India in FY22, but have attributed this to the lower base of the current financial year. Fitch said the Indian economy will rebound in FY22, pegging the growth at 11%. The double-digit growth rate they expect for FY22 simply reflects the low base in 2020, which also says that it does not expect GDP to return to pre-virus levels until Q1 of FY22. Goldman Sachs expects a 15.7% growth in FY22, but it expects real output in March 2022 would be still about 2 percentage points below the level seen in March 2020. As for the global view, Fitch expects global GDP to fall by 4.4% in 2020, a modest upward revision from the 4.6% decline expected earlier.